IVM.
Folks, welcome to Paisa Vaisa. I'm your host Anupam Gupta, B50 on Twitter, and today my guest Keval Bhanushali, author of the book Fintegrity, co-founder and CEO One Finance. We're going to talk about misaligned incentives and how they can impact your personal finances and what is the way out and much more. Keval, welcome to Paisa Vaisa. Thank you so much for doing this for our listeners.
Thank you, Anupam. Thanks for having me here.
Fantastic. Let's start with what is One Finance about. How old is it? When did you start it? And we can start from there.
So One Finance, Jeet Marwadi and I, we incorporated this in 2021. It's a new age finance company, and we focus on personal finance, and we are looking to kind of get financial well-being into the Indian M&I space. That's the nutshell of what we are doing.
Okay, fantastic. Let's start with an overview and trying to understand what is the use case for the product, right? Because I have been to your website and I see that you mentioned that the financial service industry has misaligned incentives. So what do you mean by that? And we can just talk a little bit about that.
Sure. In fact, I also appreciate a lot of work done by you as well in that
Thank you.
field, and a lot of things that we have written and taken in Fintegrity is also inspired by a lot of your work. So misaligned interest, I think very basic misaligned, which all of us have faced as MNIs is, a bank is incentivized to sell the highest commission product. I mean, that itself is the first misalignment that we see, or any distributor, we are trying to align the interest of the customer, the distributor, and the manufacturer, in the same line, and that's what we are doing. And we are aligning it with the customer's interest, to be very honest, because that's the easiest way to do and the correct way to do. So we are keeping it simple, we are keeping it straight, and nothing fancy, not reinventing the wheel at all.
Yeah. Let's take some real life examples, right?
Sure.
One of the ones that I keep on hearing a lot is I walked into a bank branch. Suddenly this guy comes and says, boom, buy a ULIP. Can you probably just list out a few of these examples that are the most common ones that are sold, which we know, probably and I know, and maybe our listeners don't know, wrong product to the right person?
I mean, I can go on and on.
Let's
because
just try for the top three maybe.
So the top three, I think the first one is credit. I mean, the credit, though, insurance happens to be the most baddest kind of an apple in the entire bouquet that we all talk a lot about. But when we were doing research, we realized that credit is probably topping the chart, because India is a net credit market and not a net investors market. So when we tried understanding that, we realized that credit was the most missold. The moment you are at a vulnerable state, starting from rate of interest to foreclosure charges, to selling you SIPs to recover your loan interest. I mean, even in credit itself, there could be probably 50 different examples of missold credit, starting from a BNPL to a credit card. Something really funny happens even today with people like us. Whenever we open a bank account or something, to maintain a lot of other relationships and with the banks, the topmost person in the bank also ends up selling you that, I've really come up with this kind of a credit card, and I'll ask my person to get in touch with you. Why don't you take that credit card? And that's really sad and funny together, because of the irony that it actually demonstrates. So we understand that credit is one of the most missold product, and be it education loan. I think it will be very sad to know that most of the education loan in terms of value in India is taken by the people aged over 50.
How does it?
Yeah, that's the biggest thing, because what happens is we don't really have products that actually are given to students, right? They are given to parents for students. Unlike developed economy, where a student loan is actually taken by the end user, and in India it's just a shadow loan, where it is named an education loan, but it is nothing beyond a personal loan, or in some cases, even guaranteed by an asset owned by a parent. It's just a mortgage loan or a personal loan extension, and it's a very difficult situation. We see a lot of people that come to us with their personal finances where they've sent their kids abroad, and suddenly something like COVID came up, and it's very difficult for them to restructure those liabilities.
I heard you saying India is net credit and not net investment. You want to just expand on that?
So in terms of numbers, I think we are there are a hell lot of reports when we talk about that. We are almost like a $1 trillion deficit kind of a situation. There are reports that says that. There are reports that talk about a different kind of an 100 billion market, which is totally untapped when it comes to credit, just for MSME segment and all, right? So when we talk about a net investor, we have analyzed close to around 37,000 customers in past 7 months that we have gone live with, and out of which more than 1,500 plus have become our member. And when we were looking at their net finances, we realized that most of the people have much higher liabilities when compared to your net cash flows and all, and they also intend to take higher liabilities in their day-to-day life. So investment is not their primary objective when they talk about money.
Okay, I want to understand the book, right? I mean, Fintegrity. Could you just walk our listeners through what the book is about? What is the thought process, and who is this book for?
Absolutely. This book is for two people. One, of course, people who are already practicing financial services as a profession. And the second one is the upcoming, fresh graduates and all who are looking for different avenues, and especially the way, we look at it, India needs to have a lot of practicing professions, just like chartered accountant and lawyers and doctors, because there is only that many chartered accountants that actually you can have now, because considering the passing percentage has risen up to 12%, which was supposedly around 2% almost 5-7 years back. So considering the supply in other professions, in India, generally you talk about being a chartered accountant, doctor, or an engineer, and probably after an engineer doing an MBA, right? So this as a profession, CFP, a certified wealth manager, these are the professions that we feel that India has a very big gap of. At least 1 million jobs can be created for that. And when I say jobs, I'm talking about self-employed professionals as well. So this is something which we really want to promote and educate the new age people who are walking into the workforce. And along with that, I think this is when I say about people who are into financial services, it is about the Keval of 10 years back, who was working in a corporate and kind of not being able to come into terms with what was actually happening versus what was right, and giving them that courage that it's all right. There are a lot of people who have not been in terms with those kind of sales practices which come at the cost of your values, and you do not have to sacrifice your values to achieve financial success. So this is a story of a lot of other people like me who have achieved financial success by doing the right things.
I wanted to get to that actually. Two things here. One is, what is the message that you're trying to give the readers? Okay. And second, the people who are there in the book, which I find really interesting.
Message, like I said, it's about getting financial success along with your values, and demonstrating it is what we are trying to do with the stories of these 7 amazing people. And these are people from all walks of life, so these are people who are RIAs, like I said, some of them have been featured in your book, and they have done some amazing work, so somebody like a Melvin Joseph to somebody like a Neha Nagar. She is a prominent creator, finfluencer or a finance creator, And even then she upholds some basic due diligence in what she's been doing, and how she's conscious about what is happening, and not just giving in to that clickbaity kind of a content, which is generally assumed that if you want to be into content game, you have to do all this stuff where you have to just demonstrate how to be a crorepati in 5 days. So we are just talking about these amazing people.
Yeah, and the book's been out for some time, right?
Yeah, it's been out. It's been out for a few months, and it's been really great to have positive responses around it.
Sure. So folks, please check it out on Amazon, Flipkart, or wherever you get your books from.
Yes.
What is the way forward, do you think, in the financial advisory practice, right? I mean, for someone who's an RIA, it's tough. If I look at both sides of the table, if you look at someone who's an RIA, compliance has gone up, your target audience is also a little bit restricted because your model is based on AUM. Okay, so that's as far as the practice is concerned. Now, if I look at the consumers, people who are probably listening to this podcast, or people who consume a lot of content on social media, all of that is totally and completely free, right? And there is, say what you want about it, whether it's clickbaity. I always look at the broader picture, which is that the influencers get the message across.
Right.
And if you're encouraging good saving habits, if you're telling people to do an SIP and not, say for example, blowing up the credit card debt, then ठीक है यार, उसके साथ थोड़ा बहुत माल मसाला भी कर लेते लोग तो भी, now how can you stop that, right? Because it's free and they also have they also have a practice run. So, for someone who's seen both the sides, can you tell me that what is the way forward now? What will need to happen for the RIA practice for their services to become more massy?
Absolutely.
If at all it can. And what has to happen for the influencers for their product to become little bit more credible?
Right. So, primary being into different set of businesses, whether it was broking, whether it was fund management or other set of businesses, I think there is that confusion in the Indian market, and financial planner tries to be a fund manager or a wealth manager. You're not. Okay, a fund manager is a very different hat. You are already given a certain allocation for equity. You do not have to then manage it in cash and sit on all that stuff. If you are given an allocation of equity to a fund manager, irrespective, he has to be invested in equity, right? That's a mandate that is taken. So they are money managers. Fund manager is a money manager. A financial planner is actually an emotion manager. He's a behavior manager. So across the globe, you look at them, they are behavioral coaches. They are financial behavioral coaches, and they are not money managers. So, you don't really have to know what was Nifty today if you are a financial planner. If you are a fund manager, you need to know what was the volume as well today, right? So that is one thing which has to change, and which is changing very rapidly. So that is there. And taking the cue from what you mentioned, it is called a practice globally for a reason. It cannot be charged on AUM. That is what we believe. We have seen that if you're a fund manager, it aligns for you to charge on AUM. But if you are a financial planner, you need to charge like any other professional, like a doctor, like a lawyer, per consultation, per session, and, pay per use. That will make it more legitimate. What happens is, if as a financial planner, if you are just trying to replace, a distribution cost of 2% or 1% by a AUM fees of 1%, you're not really adding value, right? You're just replacing something here and there. You're like, instead of that person, pay me. That's what you're doing. You're not just saying that, instead of that mode of payment, this is the right mode of payment. And honestly, like as a financial planner, how does it matter for me whether it is a 100 crore portfolio or whether it is a 500 crore portfolio, right? Agreed that the basic cost has to be covered. So I can have an entry level, which we do, but charging on the basis of AUM itself for a financial planner, it's a wrong starting point. That is one. And secondly, aligning your interest. Of course, the moment you start giving that freedom to the customer, you are automatically going to be more agile and more, conscious towards the customer's welfare. The third important thing that has changed, when is the consumer. So when the consumer is ignorant, a smart seller will have his way. Once the consumer is smart, the only way to win a smart consumer is transparency. You can't be over smart with a smart consumer. That is what is happening currently, right? Because say, people watching this podcast, they are a certain set of smart people. They are not like how consumers used to be 20 years back, that bank ke branch manager ne bola hai, so it's a given. I just don't understand anything that's written in black and white. Today the consumer is not that. We are dealing with smart consumers. We cannot be over smart with them. We will fail them. We can only win them over by transparency. So that's what we are doing.
Okay, and on the other side, people who give everything for free, because whatever, I mean, they're doing a great job at spreading the message, but not all the messages are. What needs to happen in that ecosystem out there? Because it's a huge ecosystem now. It's growing bigger and bigger and bigger. Some of the stuff is like off the. I would really, I would be scared if I'm someone who subscribed to that person also. What do you think needs to happen out there?
I think we are always very pro-regulation, and there is a lot of history behind it. I mean, we have grown up in an environment when the PAN card was mandated in stock market. A lot of brokers would say, "अरे अभी तो धंधा बंद हो जाएगा, PAN card दे करके शेयर बाजार में who works and all that stuff." And today we are like some 50 times of that volume and some 100 times of that volume, right? So regulations only increases participation because it increases a very secure atmosphere for the customer. Yes, as somebody who is into the ecosystem, you feel a lot of pain because your compliance cost increases, your work increases, it becomes tedious. But I think a lot of regulation needs to come in to segregate education, which is the content game, where they are spreading the right message, which is required. In a country like India with such length and breadth, we require that level of deep penetrated education. And that can't be left over for service sellers, like somebody who is selling the service, they will only go at that speed, right? So that free messaging, education and all needs to continue, but it needs to be segregated.
Sure.
Okay. And they can be benefited by the views and the other, payment terms, how they are being incentivized by the channels or, the current ecosystem. The second is the advisory part. That needs to be broken into definitely something which is a stock market related advice, which is just an investment advice. A stock research or a research analyst is not and financial planner. These are two different things across the globe. So in India right now, I think that's where, RIA is a very broad basket where you're only talking about everyone. Insurance advisory is not even factored in, which is one of the biggest part, right?
Yeah. Keval, tell me about One Finance. How are you solving the problem that we spoke about so much in depth in the first part of this episode?
So we are solving it in, a three-dimensional approach is assess, and only then advise and then assist. So we are strictly against all this thumb rule and generic advice that 50, 30, 20 and these kind of bifurcations. We don't believe in that. 100 minus your age, these kind of allocations. So we are the only financial institutions in the world right now to have a psychological patent on your financial personality, which is money sign. We have got an India patent, we have filed for US patent. And so that's the starting point, right? I mean, your risk appetite being asked could only mean a derivative of how you're feeling today. But what your psychological risk appetite is much bigger than your financial risk appetite. So nobody is assessing that. So that's how we are assessing. We are assessing it psychologically. Then we are taking that entire demographic assessment, and then we are taking the aspirational assessment. After that, only we get into any kind of advice. And once the advice piece starts, it's algorithm plus a QFA, which is a qualified financial advisor. It is very important to mention, and also a proud moment for us, that we provide advice only through qualified financial advisors. So, not an RM who is just, MBA finance, or even a chartered accountant who is not trained to give financial advice should not be giving a financial advice. So CFP, CWMs, these kind of some qualifications that we recognize, which even SEBI recognizes. Only then we give some kind of an advice to the customer. And third leg is we ensure that they assist it. Sure. So we assist them in entire execution, entire relooking. So the execution part is completely free. And we ensure that there is no transaction cost that is there. So no commissions, nothing.
Okay. Just for our knowledge, what is your regulatory status then? Are you,
RIA.
so you are a
Institutional
SEBI
RIA.
institution?
SEBI
RIA.
registered institutional RIA. That's our, our parent. And along with that, we have also, filed for a P2P license and other companies as well.
Okay. How does the process work? So I log on to or maybe I download your app and
Yes.
then I sign up.
Yes.
And what happens after that?
So the app is very self-explanatory and there's a smooth process there. Once you log in the app, you start with taking your money sign. You understand your financial personality. It's an 7 to 10 minutes kind of a duration assessment. It's based on Big 5 personalities framework, which is by far the largest and the most adopted psychological framework. After that, you can set up an appointment. So our concierge team will then help you gather all your data. If you have it, they'll take it all up, and then that is processed on our algorithms based on your age, your money sign, your other liabilities, your dependents, all the demographics, your career, all of it, and a plan is generated. Then a QFA will assess that plan and complete it by ensuring that your aspirational angle is met, because no machine can actually gauge your aspirational angles, right? So based on that, we then create an entire customized plan for the user, and which is then taken step by step. That includes investment, that includes liability, credit assessment, repayment of credits, taxation planning, will and estate planning, all of it.
Okay. What is the money sign? In the sense that is it a numerical score, or how does it work? Or is it a qualitative score? How does that?
So it's an psychological assessment. Like I mentioned, it's based on Big 5 personality assessment, and it was predominantly established by Dr. Goldberg in 60s. And it's a very commonly used psychological framework for any kind of assessment. Okay, we have kind of in the last 5-7 years, and also there were some amazing scientists that worked on it. So they were able to then map each trait from the Big 5 personality on your decision making in finances. So based on that, we have created 8 different money signs, and they are again inspired by Darwin's theory of evolution. And so there is air, land and water species. Surprisingly, we still carry up to 90% kind of a DNA from a lot of species, and that's a certain reason why we behave a certain way, right? Why somebody is more peaceful in taking risk, while somebody is extremely anxious, even if there is a slightest amount of uncertainty that is thrown on them. So that's your emotional trait. There is no point in negating it and ridiculing it. The worst thing that we are doing is we are asking everyone to kind of accumulate wealth till 80. The goal of financial planning has never been to be rich at 80 that you will never be able to use at 80, right? The idea is to be or live peacefully till 80. So One Finance is in the business of peace of mind. We are not in the business of wealth creation or any other sort of financial business.
How does the pricing plan work?
We charge consultancy basis, per consultancy basis.
Okay, so that's on a client-to-client thing. I mean,
no. It's a standard. It's a standard plan. Right now, it's a standard plan. It's 2,500 per consultation.
Okay.
And so we have different set of QFAs, and that's a flat pricing that we have right now.
Okay, so my entry fee to you is 2,500 to get the consultation.
So
the money sign is free.
Money sign is free. Currently, we have kept the entire first plan free for users.
Okay.
So you get charged from the second one. Because you haven't really tried, right? Everybody thinks financial planning is investment planning.
Yeah.
So at least for the first time, they see a 50-page report which has liability planning, how to get your debt from, how to recover your 15-year housing loan in 8 years without really burning out. Those kind of stuff.
So, there's one thing here that I always wonder, because that's a question that I get the most from a lot of people, which is that I just want someone to have a look at my thing and just guide me. Okay, it usually starts with things like just tell me 3 SIPs, just tell me 5 SIPs.
Right.
And then it usually builds on that slowly, when as people get more comfortable with investments, then the question increases. Obviously, the engagement level is also low because the trust is a little bit tough to build.
Right.
How do you solve for that? In the sense that you are not going to get all the info at the first shot. People typically just want to get the investment part at and then say, okay, chal, baad mein hum log dekh lenge kya karna hai.
I think this is something which we started off with, to be very honest, because we felt that people in India, especially, so a ultra rich guy hides their net worth, and then MNI guys hide their liability.
MNI being medium?
Medium net worth. So what we believed was कि जो एक upper middle class और Henry kind of zone जो है, so they generally try to hide their liabilities, and who is ultra rich, they hide their net worth. But when we actually started this entire data collection and all, we were surprised that currently 99% of our users who come on our consultation call are extremely comfortable in giving the data, because they are coming with that kind of a mindset that we want to know. And second very important thing is, they are not dealing with any relatives. There is no common connections, right? You are dealing with a professional. You are not dealing, so there is a difference in dealing with a genuine professional doctor versus a doctor who is also a relative, right? So your discomfort or some kind of resistance could be there because of that relationship at a family level. So this was a complete new understanding for us. While we thought that people wanted more of known people, but almost 99% of the people are looking for completely new and unbiased professionals.
Okay, who is your ideal client? Who is your product for?
My product is for people like me, people like you. It's an aspirational Indian product, and it is for people who have been working hard, having that particular 20 lakh plus kind of an financial exposure. So not necessarily income. People who have walked into banks and have been sold something or the other. Right. So it's not for somebody who is doing the first SIP.
Sure.
It is for somebody who has over the years now accumulated 7 SIPs and doesn't really know कि भाई ये क्यों किया मैंने. And the moment they'll realize that 67% of the allocation is into the same stocks.
Sure.
You have just diversified AMCs and not actual risk. Right?
Okay, how do you, how are you different from the others? How are you different, say, for example, from a robo-advisor? You have someone who's, set up an app or set up a website, right, offering the same service. What would you say differentiates your product?
One, we are definitely not a fintech. We are, if at all, we are a wealth tech, and we are omni-channel. So we are very certain that if you're building an institution, you need to be omni-channel. You can't be just an app. Because you're dealing with serious money and a lot of money, right? After that, we are not creating an employee base to service or sell, right? We are creating an ecosystem where the partners are completely unbiased. They are not in our control. They are not our sales agent. So the interest of the customer is taken care by design and not by a promise. So somebody who is going to advise, a QFA is not on the payroll of One Finance that they would, at some point start advising something. And the third and the most important thing is we have zero commission, affiliations. So there is no way that we are going to sell any commission product because we have no affiliations of that sort.
Okay. And how are you different, say, from the professionals in your book? Mm-hmm. Like, shouldn't I just approach Melvin? I take up your book, I read it, and I really like Melvin, I just go to him directly. So, this is a little bit, I face this situation a lot in other areas. When I had written my book, and Melvin was actually among the more popular guys. So, right, how would you deal with that then?
We are actually creating an ecosystem for the likes of Melvin or, all of them, while they can continue doing their practices and all, right? What we are telling is, RIAs who are independently also working, and, they can do that. They can come on our platform. We get the customers and they can actually advise to those customers. And someone who is a professional, they can come on our platform. They can use our institutional RIA. They can come as a partner with us. Sure. And then they can use the entire ecosystem that we have built to avoid all the compliance and, other management cost and everything.
Yeah. So I want to get your message for our young people out there. Say a 25-year-old or 28-year-old who's just started his job and who's obviously not reached a threshold to probably approach you, but all he wants is like maybe good financial habits. Yeah. Place for him to plan out his investments. Okay? Because he doesn't have any liabilities as of now. What would be your advice to him in terms of products to own? Okay, habits to start. Just these two.
habits to start, of course, my first advice would always be just try and note down all your expenses. I mean, the first and the easiest thing that I realized, the moment you start noting down your expenses, and more so in this era of GPay, पहले तो फिर भी थोड़ा बहुत कैश रहता था, तो you would pinch 5,000 rupees getting out of your hand. But currently I see a 25,000 rupees swipe without even getting noticed. So tracking your expenses is very, very important if you're really starting your financial journey like a 25 or a 28-year-old. And second most important, please start holistic financial planning. You may think investment is going to make you rich, but I can tell you that the richest people in the world have got amazing liability behavior management. And I can go on and on that. But if you just like working out, right? Body 20% gym में बनता है, 80% kitchen में बनता है. पैसा अगर बनाना है आपको, 20% is investment, 80% is your liability management behavior.
Let's build on that.
Yeah.
When you say liability behavior, what do you mean? It's a term that you don't hear too many people saying. Like an average conversation between two people is like which mutual fund to buy, which stock to buy. Talk to me about this liability thing.
So to take that point, we do not advise even a single scheme on our financial plan. And not only us, the best financial planners, the likes of the Edward Jones in the world also, they do not go out there and advise you a last mile scheme, because, the top 5 schemes, honestly, if you rate them, your guess is as good as mine. None of us know that top 5 after a certain research that we do, we publish a featured report. From that top 5, which is going to be number 1 the next year, none of us know. Yeah. Because historically, there is not even a single mutual fund scheme that has been number 1 consecutively for 2-3 years. Right, so that's not possible. Maximum I think it has happened once, that is for 2 years. Sure. Right, so point is that rather than chasing the investment scheme, you have to chase the behavior. Okay, and when I talk about liability management, those nuanced decisions of whether to actually buy a home or rent is extremely, extremely personal and situational. You can't just listen to a video that tells you that owning a home is a foolish decision and these are the 5 people. And I can tell you, like, I have met extremely wealthy people in my life. I am yet to meet a wealthy person who is not having a home. So I definitely, I don't need to be really smart there. Yeah. And I can ask any one of you that if you know anybody wealthy, they definitely live in their own home.
And that's not a coincidence.
That can't be a coincidence, right? 100% of the wealthy people are living in their own houses, and you're saying that buying a home will keep you poor. Yeah. That can't be true, okay. Right?
So that's one product off.
That
off
one
the
product
table.
off. So, like even smallest thing, like if you are a practicing, lawyer or something, you have so many other avenues of creating passive incomes, and India is opening up to that, right? Like how can you actually borrow at a lower rate and manage your behavior? A 25 point difference in your CIBIL score will mean a 50 basis point reduction in your borrowing rate of interest.
And people don't get that.
People don't get that because nobody is selling that, right? Because there is no commission in explaining this, right? Yeah. If I tell you that these are the top 3 mutual funds to buy, I might get something. Top 2 insurance to buy, I'll get something.
Just repeat that once again for us, please. A 25 point difference, as in a lower or higher score in your CIBIL.
In your CIBIL.
Let's say difference between 750 or 775.
Amazing. Yeah, that's the biggest inflection point. Yeah, that's the biggest inflection point. Yeah,
can actually reduce or increase your
rate of interest
50 basis.
50 basis point. Now imagine that 50 basis point actually translate to a 5 lakh rupee over a period of 20 years. Yeah. And that's a lot of money on a 1 crore loan.
No, come on. 5 lakh rupees in general is,
Yeah. You can work a lot hard, and now imagine to save 5 lakh rupee, you at least need to earn 20 lakh rupee in a country, right? Correct. Anybody who is earning 20 lakh rupee and saving 5 lakh rupee is considered having a very good investment habits, right? And imagine you can save 5 lakh rupees just by being like a tad bit, conscious.
Not even hardcore.
Not a hardcore, just a tad bit conscious, right?
Yeah.
Just an improvement.
People just don't get that
right?
part.
So those are the things which is why I say a financial planner is a behavior coach and not a wealth manager or a particular money manager, right?
Yeah. Okay. We're pretty much done, Keval. I have my usual standard question that I have for all our guests who come here, and content recommendations? What book are you reading? Or what series are you watching? Anything on that? Or both?
Series, I think I was completely off from series for like 2 years.
Okay.
So I just started watching Quora on Netflix, and I think the intent of going on Netflix again was to watch a series, I think, on financial well-being.
The
smart money, or be smart with your money, something like that.
That's a really good series.
It's an amazing series, and I'm really amazed that they have been so in depth with those kind of content. And
anybody can watch it.
Anybody can watch it and should watch it. Should watch it. That you really understand that how vulnerable those situations are when you are walking into a showroom to buy a 10 lakh rupee car, and you will come out buying a 15 or a 20 lakh rupee car. You really need somebody watching your back at that point.
2 lakh ज़्यादा में ये मिल जाएगा, 3 lakh ज़्यादा में ये मिल जाएगा.
Once a life है, once a life decision है. घर लेने गए 1 करोड़ की जगह 1.5 करोड़ का घर ले आ गए.
That's how it is, yeah. And book, though, of course, you've written a book yourself, so I'm pretty sure.
So book, in fact, I had started reading your book.
Oh, thank you.
And
thank you so much.
I must say, I mean, I'm not just saying it for the reason why we are meeting today, but on a very serious note, I mean, every story out there and the way it has been categorically put, I'm really glad that more and more work is happening on that level, and it's inspiring people like us to do better
Thank
work.
you so much for that. I think the RI model is still a work in progress. I think that you'd understand that. Although you're behind an institutional product, but for people like Melvin or Harsh Rungtas and all of that, and they've all been on the show. For them, they're doing some outstanding work.
Right.
I just hope that this evolves faster than slower, because I think where it is right now, there's a lot of compliance issues and a lot of stuff happening, but advisory needs to change. I mean, how do you get people to really sign up for good behavioral practices? I don't know. I mean, you're solving this at a slightly higher level, but I'm just trying to figure out who's going to solve it at the mass level. Where is someone who joins this job, where is he going to get, an instant plan then and there that he can trust, by the way, that he can trust, that just starts him off. People don't know what is an SIP. They just, whatever you see on the screen and stuff like that. And I'm just talking about investment, which, like you said, is actually the easiest to understand.
Right.
You get into stuff like loans and credit cards. That's where I always remember my first credit card.
We all do, right?
Blew it up.
Everybody. Totally I'm honestly, I mean, people who have been into this kind of industries, my first credit card, I blew it up like on my first job. I started with a bank, so I get a bank. Immediately, the first thing that happens to you when you join a bank is you get a credit card, right? Because you are in that pre-approved zone.
Absolutely.
And the second thing that you do is you blow it up with your colleagues, right?
Well, the best part is today people call themselves CC geek. There's something called credit card geek. Okay, I'm fine with that. But spending 1 lakh to get more reward points, I'm not sure how that works. I don't know about that.
Yeah, in fact, that is something which is very dangerous. A lot of people talking about reward points. Honestly, like when you and I are sitting here as well, I don't own even a single credit card anymore, right? I mean, and the point is that I have understood that maybe I don't have a correct behavior and the need both to own a credit card.
Wow.
So why do I unnecessarily need to own it because it's fancy, right? And I can do away with that 0.01% reward. I might reduce my purchase by 2% if at all I want to save that 0.1% as rewards.
I don't know.
That's easier to do for me.
I mean, I just don't know. There was a popular credit card which apparently it's called D-value. D-value.
ये तो मेरे को भी अभी पता चला कि D-value ऐसा भी होता है.
I didn't have any idea. So I'm like, till a couple of years ago, it used to be about the best SIP and best mutual fund, best of now it's best credit card.
So
your point about liability is like really interesting. And folks, whatever your takeaway is from this episode, please focus on that part about liability management. Very interesting, very important, because, your investments can have whatever rate of return they want, but you do not want to mess around with your loans. But that's it. That's a wrap on this episode of Paisa Vaisa. My guest, Keval Bhanushali, author of the book Fintegrity, Amazon, Flipkart, or wherever you get your books from. Please have a look at that. And of course, co-founder and CEO of One Finance. Keval, first of all, of course, I wish you all the very best at One Finance. How old are you guys?
So we are just 2 years old now.
Just 2 years old.
Yeah.
I just hope that this message goes across to as many people as possible, and you grow and you learn, and you of course return to our show. Thank you so much for doing this for our listeners.
Thank you so much, Anupam. It was a pleasure.
Thanks a lot. And listeners, thank you for listening to this episode of Paisa Vaisa. You can check out other interesting podcasts on the IVM network. You can listen to us on the IVM podcast app or ivmpodcast.com. You can also follow us on our social media. We are IVM Podcast on Twitter and Instagram. And if you want to reach out to me, I'm your host, Anupam Gupta, B50 on Twitter. And thank you so much. Really, folks, thank you so much for listening to Paisa Vaisa.
IVM.